Hey y'all, Katie here with Team EvoAZ, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
What's up, everybody? We are back with another monthly market update. It's Katie and
Matt and
Ryan.
Yay! Welcome, guys. Silence.
Yeah, well,
That's
welcome.
when you were supposed to talk right there.
I thought we were welcoming the listeners. My bad.
No worries. No worries at all. So let's dive right into it, Ryan. I know there has been a bunch of news in the last couple of weeks concerning rates and Fed meetings and inflation reports and all of that jazz. So let's start off with that and jump right into it.
Yeah, a lot to cover. Thank you. So, the big news this month was the Federal Reserve meeting, which was on September 19th. Now, this is always closely watched by all the markets. It was widely reported in the news that the Federal Reserve decided to pause rate hikes. So you would think this is, good news for mortgage rates, but, the pause was already expected by a lot of people. And the focus was actually on what the Fed Chair Jerome Powell's comments are on future rate hikes. And in Powell's press conference, he did signal one more hike over the next two meetings because inflation still isn't in the Fed's, real target range. Their target's about 2% in inflation. Currently, it's about 4%. So we have seen a big drop, but not, where they want it to be. So I know we've talked about it in past recordings, but, for those of you who are new to the show, I just want to kind of give everybody a quick summary. The Federal Reserve's main focus right now is to lower inflation. And the Fed kept the funds rate at zero from the start of the pandemic until March of 2022. And they wanted to make sure people still spent money, and the economy stayed strong even with COVID fears. But, so money was very cheap and spending skyrocketed for a long period of time. But, there was too much spending really, and inflation jumped too much. And your money really wasn't worth as much out there because there was so much spending. So that's when inflation goes up. We all felt this, especially at the grocery store and the gas pump. So
Absolutely.
to really lower things, so really to lower things back down, over the past year and a half, the Fed raised the funds rate from that 0%, which we had for a couple of years, to about a 5.5, where we're at right now. So what they're really doing is they're making money more expensive, and they do want to slow down spending, and it has worked. Inflation has dropped a lot, but not to the Fed's target. So they want to keep things tighter for longer, which does keep mortgage rates higher for longer. And the hope is that near the end of the year, we'll see a drop in inflation near the Fed's target, and they could confirm maybe a longer pause in hikes and maybe even possible cuts in 2024. The one thing they don't want to do is cause too much of a recession by limiting spending so much. It's possible we could still get into one. We don't know, but that's what they want to prevent. So it's kind of a tightrope that they're walking. But that's what we're waiting for right now. And that's going to really help the stock market and mortgage rates whenever they decide to pause for good and maybe even drop the funds rate.
Yeah, absolutely. How has this been impacting on your end with buyer applications and all of that jazz over the last month?
It's funny. We still have been getting consistent applications. I think the one thing that we're kind of running into, though, because we always have this discussion with our clients, we talked about current rates, where they're at, depending on the credit scores that they have and the down payment, and what that would translate to in terms of payments for the price range they're looking at. So I think right now it's still affordability is the one thing that we're running into. A lot of homes are a little bit too expensive. And, for what they could get out there, it's making them kind of anxious to buy. And a lot of people are kind of sitting on the fence is what we've been running into over the past few weeks.
Yeah, absolutely. And we felt like it was a little bit quiet over the last few weeks as well. As of the last couple of days, there's been a little bit of jumping off of the fence for us on our end. And I know, we've been working together just this week. You've talked to a couple of my clients. So we're hopeful, that they're able to get approved for what they want and that they're able to move forward. But you had mentioned that there have been some concerns about affordability. How are you helping clients combat that?
Yeah, what's interesting is I was reading a Zillow study that suggested that more prospective buyers are leaning towards buying a home with a friend or a relative.
Oh, yeah.
So it's basically someone who's not really their spouse or a partner. And based off the survey results, it was I think it was 19% of prospective buyers are going to be buying with a friend in the next 12 months. And the main reason is housing affordability. They want to stop renting and they want to get into a home. So it's kind of funny because we've been seeing that as well. We've been seeing more friends getting together and buying together. They want to get in the market. They know rates are high. They know they're going to go down. They could refinance or maybe even sell, take some of that equity and buy on their own, a year or two down the road. So we are having that discussions, and a lot more people are going down that option.
That's an interesting option. And the question probably arises in other people's minds out there is, do the two friends then have to both occupy the property as their primary residence, or how does that work?
Yeah, they don't. You could have one friend who's a non-occupying co-borrower, and they don't have to live in the home. But most of the time, they are all living together because they want to help out with the mortgage payment. That's what it's all about, is affordability, but building equity at the same time. And we always have to have that discussion beforehand. Sometimes it's even good to talk to a mediator or even an attorney to draw out plans to say, hey, when we do sell, we got to split the equity in half, and how that works. So if that's something you do want to do, it's always good to plan ahead, and we can have that discussion with you and refer you to an attorney that could help you draw something up so everybody understands who gets what when they sell the house. But it's a good option to kind of combat, high prices and high rates right now. And affordability is difficult
Yeah.
for first time home buyers.
Yeah,
For
100%.
sure. Oh, sorry, Matt.
No, I definitely agree. I think it's kind of interesting too because that's how I purchased my first home. It was actually with a friend, and if I look back in like 2004 when we did this at the beginning of time, it was once again kind of because of affordability. But I also think this was pre crash, pre housing crash. So at that point in time, like real estate definitely represented something different to I think my generation and what we thought of as buying. Then you see the crash happen, and it really, really shook up everyone, especially those younger buyers. And it's now interesting to see that they're taking these tactics to ultimately come together, join their credit, their income to purchase real estate versus rent real estate.
Mm-hmm.
So I think that's really good. I think it's definitely a good sign of things.
I agree. I have had a few buyers that have been talking about that type of situation, that type of setup so that they can move forward and jump into the market. What about rate buy downs? Are those still pretty popular?
Yeah, those are still popular. We're getting some clients who are getting seller paid closing costs, and it's always good to have those to help out to buy down the interest rate. We don't always recommend it. Sometimes it's good to get in because if you're planning on refinancing in a year, the extra amount that you pay to buy down the rate, you might not make that back if you refinance it. But
Right.
another popular program, I know we spoke about it before on the show, is that 2-1 buy down program. And that's really when the seller actually helps out with concessions. You could use that to do the 2-1 buy down. So the rate is 2% less the first year or 1% less the second. And during that time period, you really want to refinance, obviously. But it gets you into a house with 2% less than the current market, just to have a lower payment over the first year. So that's a great option as well that we always want to discuss if we have clients making offers.
Totally agree. We are getting on our listings, we are getting a lot of requests for additional seller concessions, specifically for rate buy downs. And obviously, we're negotiating that on our buyer's side as well, because we're real familiar with that and how helpful that can be. Something that there's another show that Ryan and Dana is on. Dana is one of our team members. You guys had talked about a couple of weeks ago, loan assumptions. Is that something that you're seeing? Are people using that? I mean, I know that will come along with a large down payment in most cases, but are you seeing success in this?
Yeah, it's some success. It really depends on the buyer. So for those of you who didn't see the Tip Tuesday I did with Dana Wilson, that you could actually assume a mortgage. And what that means is if you're looking to buy a house and the seller has a great interest rate, let's say they bought in 2020 and their rate is maybe like a 3%. And right now rates are in the sevens. So obviously you want to try to maybe get that rate instead of the current market rate. What you could do is you could try to assume that mortgage. You have to qualify for it with the seller's bank. And one of the biggest problems that we kind of run into with it, though, is if the seller, let's just say they maybe owe $200,000 on the home, but they're selling it for 400,000. To properly assume it and to make sure the seller gets their proceeds, you would have to come in with $200,000 down to make up the difference. So that's the one big thing that we see that's kind of holds a lot of people back. Most of our buyers are putting less down, maybe 3.5% to 5%, maybe doing down payment assistance, and don't qualify for that. But for the right buyer, if you have enough that you're putting down, if the loan is possibly a government loan, which is those ones you actually could do assumptions with, you can't typically on a conventional loan,
Right.
then it is a great option. It's something to consider in this market.
Well, and we have, and I don't know if the majority of your buyers or a good percentage of your buyers right now are sellers also, but there's a lot of equity out there and these sellers are sitting on top of a lot of equity. And so, if they sell their home and I think the average is almost 300,000. I was looking at an article, I'm looking at it right now, 290,000 is the average amount of equity. So in your example, if somebody were to want to come to the table with that amount anyway, it could be an option for them to get a lower interest rate because, we're not going to be getting anywhere near a 3%, even with 200,000 down at this point, right?
Yeah, those are the ones that it fits perfectly for. And we always try to have that discussion. I talk to a lot of our past clients every year. We do kind of a mortgage review, and some of them do. They say, I would love to buy a new home. I would love to upgrade, but man, I have a great rate right now, and I really don't want to double my interest rate. We have that discussion about assumptions. And if they do sell their house and they come into a lot of equity, assumptions would fit perfectly for people who are selling and have a lot of equity and looking to upgrade. If the seller has that option. So yes, it's perfect for move-up buyers who are selling a property.
Totally agree. And then to speak to the affordability, I think that especially people who are downsizing, so maybe they're empty nesters or, they're getting to that point in life where they just want something smaller. I feel like, and I know because I have several clients that are in this situation, they're sitting on a lot of equity on their homes because they've been in their homes for, 10, 12, whatever amount of years that it is. And they may even be able to extract the equity and turn around and buy a smaller property in cash and totally just not even care about what mortgage rates are doing. You know what I mean?
Yeah,
absolutely. Yes, Matt. Sorry.
No, I think that's definitely you got to get creative. In these markets, I think, you ultimately do have to get creative. And I think sometimes, especially a lot of people that like the description you just gave, Kate, they might not even consider that because most of their lives they've now taken mortgages.
Yeah.
So to think, oh, wow, I'm in a position to actually purchase something with cash, it might not even be like on the forefront of their mind as an option.
Yeah, totally agree. All right, guys, any predictions for what might be coming up in the next couple of months? Anybody want to go out on a limb and take that?
I know we talked about inventory kind of clicking up a little bit. And do you think that trend is going to continue?
For right now, that's what we are seeing. We're not seeing, it's not a ton, we're not sitting on 20,000 listings or anything like that. Matt knows the specifics as far as numbers are concerned. And I got a couple of graphs in front of me too. But we have noticed that the pricing trend has trickled down just a little bit, say over the last month or two. And inventory levels have come up a little bit over the last month, I would say. Matt, is that what you're seeing on your end?
Yeah, definitely. You're seeing that. And I think, my prediction is it's really hinged upon what's going to happen with rates. I think inventory, it's the stuff that's coming up, especially during the holiday season. Anyone that's going to be adding a home to the market is doing it out of necessity. So it's not like anyone is going to be choosing to put their home on the market just because, right before the holiday season. So my thought is that's going to protect the market from seeing a lot of unnecessary, added listings to come into play as the Fed kind of gets through what they need to get through to get us the good news we want. But that being said, when we look at what we have for inventory right now, if the home is turnkey and it's priced at what market is or priced appropriately, they're getting multiple offers.
Yeah, it's true.
So I just had a client that we were looking at a home and, it was It was listed at $500,000. It was on the market for 2 days. They said, hey, we like it. We want to put in an offer. Well, there was 7 offers on the property, and it ended up going for 500 and over 540. And it was a cash buyer that ended up grabbing it. And this was a turnkey home. So, and that's what people want right now. That's where a lot of the buyers are. So it's really interesting. Then you turn around and you see the homes that maybe do need, the $50,000 to $100,000 in cosmetic updates and things like that are apparent. Those are the ones that are going to be sitting a little bit longer, because the buyers that are needing to buy and wanting to buy right now are more professional and more like, hey, we're moving here and we have no choice, and we don't have time to mess around with that, and we'll pay a premium for that. So
Yeah.
it kind of makes me feel good because those buyers still exist and people are still buying. The other side of it is these are all also, good opportunities. And the second the rates drop, people are going to be like, okay, I can justify putting money in. I can justify doing this. I can do that. And for the difference of 1,000 to 2,000 listings in a city of, over 4 million people, that can disappear like that.
Quickly.
So.
Yeah. And honestly, I think there's many agents in my boat. I welcome more listings to come on the market. I'm working with a buyer right now in the East Valley, and they're approved up to 1.2, and I can't find anything for them. Like anything good. There's some, stuff out there, but like you said, Matt, they're going to have to dump another couple $100,000 into it just to get it, up to where they want it to be. So I welcome more inventory. Something that's sort of interesting is I'm seeing 1031 exchanges still.
Wow.
Yeah. So we still have investors in the market that are trading out their properties for something different.
Yeah, well, and 1031 exchanges too, for sure. And that's it's in itself is where it's just tax savings. So even if they're looking at it and saying, hey, it's not cash flowing the way I want or whatnot, they're not going to want to pay that giant, tax amount, which is interesting. It's going to be pretty interesting now here, everything that we're dealing with, and the fact that we are pushing into an election year. And they're talking about Arizona being that hot focal point. So I'm sure, politics will have an effect. But at the same time, I do believe that it's to any politician's benefit to make sure that that effect is positive to the voters that they're targeting. So that kind of gives me a little bit of optimism. But once again, I think what we've always said in the past, you kind of marry the home, you date the rate, and everything we've just discussed right now and everything that everyone's looking at, it's like we've almost gotten to the point that we know, yeah, we might hear a little bit of negative news or see rates remain where they're at, or maybe even spike slightly, but the chances of them going down and really coming down here in the next 6 months is a lot greater. Yes. And so it's a good question to ask yourself, any buyer to ask themselves, is like, well, what am I really trying to do here? What am I trying to save? What am I trying to buy? Because if you wait too long, I don't think you'll have an option, and you're going to be dealing with competition.
Exactly. Thank you for saying that, because that is what was running through my mind as you were talking. Is right now is a good time for buyers to negotiate. I mean, prices aren't coming down a ton by any means, but like you mentioned, Matt, we've got sellers that have their home on the market for a reason. Right. So they're getting a divorce or they're moving out of state. Like I'm trying to think of, our listings right now and what their situations are. And it's all of those things. Or they live out of state and it was an investment property and it's not cash flowing like they wanted it to anymore. Or they're at that point in life where it just doesn't make sense to hold, whatever the case may be. But they want to sell. And so they are taking the steps to sell. And they're negotiating just a bit more than what, obviously we saw the last couple of years. So I think it's the buyer's friend right now that it's a little bit quiet.
Yeah.
I think you mentioned that too, that the price drops, and we're seeing more concessions lately. We're seeing sellers pay more closing costs lately rather than dropping the price. So I'm glad you said, it's a good time to buy, because I have noticed some of our buyers at the right house are getting more negotiations and starting to get some things back. And getting those seller pay closing costs to buy down the rate, or maybe do that 2-1 buy down to make it more affordable until we get lower interest rates. So we are seeing that.
Yeah, for sure. How are appraisals going on your end? I know you see, just because you're a lender, so you see a lot more appraisals than I do. I know you see most of my appraisals. But you see a lot more than what what Matt and I deal with just within our clientele. So what are appraisers doing right now, or appraisals doing right now?
We're seeing some appraisals usually come in a little bit higher, almost 2 to 3% higher than the contract price is what we've been noticing lately.
Interesting.
I know we had one Katie that we worked on, but it had wrong square footage, so that one's kind of a little one-off.
Yeah, ours that underappraised last week. Yeah, that had some errors in it. So
it did. That one was a little one-off, but yes, we have noticed that appraisals are coming a little bit higher than the contracted price. So that's great to see. Are you guys kind of seeing that as well?
With the exception of the one that you and I both are talking about right now, I haven't had any issues with appraisals. Just sold a home we closed yesterday that I was certain we would have an appraisal issue on, because we did price it on the high end because it was beautiful. I mean, the seller went in and just did everything. It was very custom, all the touches that they did. So it was kind of like no other home out there was like it. So we felt that it was appropriate to pump the price up, and it came in at value. So we were pretty excited about that.
I think that's also a good testament to the banks. You know what I mean? Because at the end of the day, if you really look at it, what's the barometer to what's going on? Well, the bank is really going to be that. And if they were very, really worried, we would definitely see, the byproduct of that echoed through the appraiser, because the appraiser is ultimately representing the bank. And, they're going to get the feeling from the banks on how conservative they need to be approaching this. And not only that, if appraisers are if they're feeling this and appraisers are coming in 1, 2, 3, 4% higher, the bank would kick it out and review it and say, we're not comfortable with this. But the bottom line is they are. So that just tells me that there's an underlying confidence in the long term of this loan, that they know that, hey, the 4 to 5 plus year that we're taking from this loan is worth it to maybe, to kind of eat something on the front end of this, if we're not really sure on values. So I think that there's a lot to be said by that.
Yeah, totally agree. All right, guys, anything else to add?
Oh, this was a great chat. I'm glad we got to cover so much.
It was. I love the fact that we covered we uncovered maybe even some ways that buyers can combat the higher interest rates. So I think that was a huge takeaway from today's show and from this update. So thank you for the information on that, Ryan. Very, very helpful.
Yeah.
Of course, you're welcome. And for those of you who want to check out any of our previous shows, including our weekly rate update, hop on over to our YouTube channel. It is at Team Evo AZ. That is our handle. If you prefer listening to us podcast style, then any podcast platform, do a quick search for Arizona Real Estate Radio, and you will be able to connect with our show. Do all the things like hit the bell, smash the notifications, follow, review, all of that stuff. We really, really appreciate it, and we will see you next month. Thanks, guys.
Bye, everyone.
Bye.
See you in October.
Yeah.